Right now, markets are expensive, the S&P 500, the Nasdaq, everything is trending expensively, but you have a few opportunities in this market. And I believe Adobe is one of the few opportunities you have right now. In this video, I want to talk about Adobe because it's a quality, good company that is experiencing a large drawdown. The stock has done nothing for the past 5 years. The stock is only going down and down and down, but the metrics are going up and up and up. More revenue, more earnings, more cash flows, massive buybacks. So you have a clear dislocation between the fundamentals of the business and the stock. People are very pessimistic. In this video, I want to cover a few points, the fundamental reasons why the stock is down, the worries people have, why I think it's a good opportunity right now, and we will do so reacting to this very good video from The Compound. The Compound is a great podcast I listen to every Tuesday. They have maybe one of the best shows on investing, so I highly recommend you subscribe to their channel. And I want to react to their videos because they will do a pitch and a great analysis on Adobe, and they will talk about specific things that I have never heard anyone talk about on the internet, on YouTube or Twitter. So it will be pretty interesting. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And my style of investing is pretty simple. It's a quality GARP, growth at a reasonable price. You invest in quality compounders and you hold for the long term, and this works. And I plan to continue to do this. And now I'm looking at Adobe. I'm doing some research on Adobe, and I wanted to share this great video with you. Okay, now you can hear, you should hear properly what they say.
Or certain trading desks to benefit. So I guess my point is that every year is weird, and they're weird in different ways. Because I wouldn't say that
into like headlines from 20.
Oh God.
British. Perfect.
I'm going to present the case.
But I'll tell you now, I bought Adobe today.
Oh shit.
All right, so let's go.
Maybe I'll make you feel better about it. Is this a generational bottom? Or could it bounce from here, but it's a company still in a long-term secular decline?
I don't know shit about
What
I
do
don't
you
know shit
think?
about Adobe. I listened to the conference call today to get a little bit educated.
Yeah.
Because Adobe,
Tell us more about your process.
as the CEO said, fuck off, it's my own money. They said, simply put, Adobe is the operating system for creative work. And of course, creative work is the epicenter of the AI disruption. My hashtag, quote, thesis, and I'll sell if I'm wrong, I'm not like married to the stock, is that Adobe is understandably being punished, but to extreme levels, and analysts are not backing down. It was a great call. It was a beat and a raise. And I think that they are going to be a massive beneficiary of the AI transformation. I don't think that all of a sudden all of their enterprise and Fortune 500 customers are going to dump Adobe and start using Banana Hammock or whatever it is, and the chatbots and just cut them out. I don't buy it.
Okay, so that's the pitch that everybody knows. That Adobe is left for dead, but Adobe is not dead. And actually, I can cross-read this video with another video that is really helpful from Arya here. If you don't know Arya, he has a YouTube channel with great videos, so I highly recommend you subscribe to his YouTube channel. And he, just after this video from The Compound, he said, "Hey Michael, I saw you bought Adobe. If I can humbly recommend 2 of my videos." Yeah, I watched these 2 videos from Arya. He has done great work. 2 of the best videos I've watched on Adobe. I highly recommend you watch these 2 videos if you want to know more about Adobe. Okay, let me continue with the video. They will talk about some metrics that are really important, and we'll talk about the valuation together. And also at the end of this video, we'll play around with the DCF, so you will know my target price, my intrinsic value, and whether I'm buying or not. Let me continue.
Okay, I don't either. I just don't know if that will matter right now. But
Totally great.
Yeah, so I actually think that there is a world in which Adobe sits on top of the entire silo of AI tools, and the user interface that they provide, whether it's Creative Cloud or Firefly or any of the tools that they've been selling to creative people for, I don't know, 35, 40 years, I think that people like their workflows in those Adobe products. And as Adobe amplifies the power of those products with AI, they will keep those customers. I don't see everybody cutting their licenses and just being like, you know what, I'm going to have the AI create all this stuff for me.
No.
Professionals especially.
So if you listen to the call, you would never guess that the stock is down 55%. John, throw this chart up, please, that I had Chart Good make, the earnings one. So we've got a chart. Josh, look, this is unbelievable.
I know.
I'm sure there are other charts that look like this, but for the listener, the earnings per share are literally at an all-time high. It was a record quarter. And yet, the market is saying, I don't believe that your earnings are sustainable. I believe that you are absolutely effed because the forward PE is at a decade low.
Okay, let me add some details on this. Okay. Adobe is a company that is profitable. They are generating massive profits and massive free cash flows. If you look at the price to earnings, price to free cash flow, this is what you have. All right. Let me start with the PE ratio of this business for the past 10 years. We are at a 10-year low. PE ratio of 20. What about the price to free cash flow? Price to free cash flow is at 14. Okay. So in 2022, the stock was down. We reached a price to free cash flow of 18. Now it's even lower than this. So ultimate capitulation, maybe. I don't know how low this can get, but as long as earnings are growing, this is extremely cheap. Adobe is extremely cheap, in my opinion. And if you look at the EV to free cash flow, if you take into account the balance sheet, same thing, we are at 14. Something that is really interesting is, let me check the price to free cash flow here. The price to free cash flow, trailing, and the forward price to free cash flow, so for the next year, on Fiscal AI are the same. You know I recommend Fiscal AI on every video, right? You know you can use my discount code in my description to get it cheaper. It's a service I use every day. And if you look at the past 10 years, the blue line has always been below the red line, which means the forward price to free cash flow is lower than the price to free cash flow, which means free cash flow is expected to go up. And now, very recently, if you look at the past few months, the blue line and the red line are the same, 14. I believe Fiscal AI is wrong. And I don't know why. Maybe I'm making a mistake, or maybe they are doing a mistake and they will be easily fixed because they are doing a fantastic job. But I think the forward price to free cash flow in blue is wrong. So let's see the real valuation for Adobe. I don't think I've seen anyone on Twitter or on YouTube talking about this. The red line is the price to free cash flow and it's 14. Okay, as you can see here, 14. What is the free cash flow for next year? Free cash flow for 2026 is expected to be growing at 10% and is expected to be 10 billion, 10.2. Okay? So what's the market cap? Market cap of Adobe right now is $135 billion. So $135 billion divided by 10.2. You have a forward price to free cash flow of 13.2. So actually, the blue line here should not be at 13.8, but it's even lower than this. My point being, we are at a crazy low valuation for Adobe. And they will talk about this in the video, but the business is still fine. I mean, the valuation is dropping like a rock because people expect the worst for Adobe, but so far so good. The business has decelerated. The revenue was growing 20% per year in the past, and now it's only growing 10% per year. But I mean, You have an extremely profitable free cash flow machine doing buybacks with a moat. You can discuss if they have a moat or not, but I think they have a moat. Growing at 10% per year. This is priced in as if growth was decelerating and decelerating and decelerating. But for the past 2 years, 3 years, you have a low plateau of 10% per year. So Wall Street thinks the growth rate will decelerate, but for the moment, Adobe is stable. Growth rate of 10% and stable. Somebody will be wrong, somebody will be right. Invest accordingly. Let me continue with the video. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video.
This is very, very unusual. And the market's either very wrong or very right.
I want to get to some of the comments in the chat because people have really strong opinions about this. And I sort of agree with some of these points. Figma's in a partnership. Adobe's in a partnership with Google long term. They always have been. But Figma is too. And Figma came public earlier this year, raised a ton of money. And they're not competing with Adobe in every part of their business, but they're a mainstream player. I think it's worth bringing up that might account for some of that PE multiple decline.
Yeah, by the way, guys, if you want to have some good fun, good joke, you can look at the stock price from Figma, and you can look at what people said when Figma went public, because people were extremely bullish, extremely happy about Figma, saying it's the future. And if you don't know, a couple of years ago, Adobe tried to buy Figma for $20 billion. And the UK the regulators said, no, it's too big of an acquisition, you will be too powerful, so let's just cancel the acquisition. Okay, and when Figma became public, they raised some money from the IPO. The stock was valued at $120, which is a valuation more than $50 billion. Like extremely high valuation. I don't know what was let's have some fun now. Since we are talking about Figma, let's have some fun and look at the market cap for Figma a couple of months ago. They had a market cap of more than, $30 billion? I believe it was more than this. But anyway, you get my point. More than $20 billion. And people were laughing at Adobe. Well, who's laughing now? Figma is down 70% since all-time highs. People are crying. It was perfect exit liquidity. And as always, you had, I don't want to say stupid, but retail investors that were fooled into buying Figma at the top, thinking it was great. And yeah, you could have easily avoided sidestep this trap. I read the documents. I read everything about Figma. It's a good business, but the valuation was just extremely high. Okay, so yeah, if you want to have some good laugh, go on Twitter, go on YouTube and see what people said about Figma a couple of months ago. It was not long ago, guys. It was in July, in August. So now the stock is extremely down and the market cap of Figma is $18 billion, lower than what Adobe was trying to acquire them for. So yeah, extremely funny to see this. Anyway, now Figma is public. Now we have the data for Figma, so we can compare the numbers between these two companies. And yeah, you have more competition for Adobe. That's a good point for them. You have Canvas, you have other LLMs that can create images, and you have Figma, and you have a couple of other players. So yes, people are saying Figma is a threat. I don't think so.
Let's see. Big Bob's Barnyard points out Adobe has ripped off professionals forever, and they have been wanting competition, and now they have options. The professionals won't come back. All right, so I think that's probably an overgeneralization.
That's true. If you look at, I think it's somebody, a member from Manual of Ideas, MOI, that argued Adobe was stealing from customers. If you want to pay Adobe and subscribe to their license, they will tell you it's a monthly recurring fee. Okay, you click on buy. It's not a monthly recurring fee. It's an annual fee that you have to pay upfront. First, if you want to subscribe to Adobe, you're being lied to. They lie to their customers. You don't pay on a monthly basis, you pay on an annual basis. And then if you want to cancel the subscription, if depending on the budget, depending on the timing, you have to pay a cancellation fee. So you are being lied to when you subscribe to Adobe. And if you want to cancel, you have to pay more fees. And there are plenty of hidden fees inside Adobe. It's not good. If you can cross-read this to another company, it's Amazon. Amazon recently had to pay some billions of dollars because they did exactly the same thing with Amazon Prime. People were unwillingly subscribed to Amazon Prime, their membership. They didn't want to because Amazon lied to them. You click on a button, you don't know exactly, so boom, here is your subscription, you pay upfront. Well, it is kind of the same system with Adobe. You think you pay on a monthly basis, but you pay on an annual basis, and then you have hidden fees. Not good for reputation. But still, the business is growing 10% per year. Still, professionals are using Adobe. Still, Adobe is the best software tool for professionals. So yes, you have some churn. Yes, some people are unhappy, but the business is still growing. The retention rate is still high. It's a valid concern, but I don't think it's enough to break the whole business model of Adobe.
I'm sure people do like that there's competition that'll be a lower price. I don't know that everybody leaves
Sorry.
just because there's a lower price competitor. Last one, Brian McKeon says, or two more, Adobe missed the boat. Could have been the new Hollywood production with direct-to-consumer platform. Hope they catch that wind. They are. So it's not Sora. They're not trying to be first. And the truth is their direct-to-consumer business is not as important as their professional business.
Good point. And you have great videos from Aria saying exactly this. Adobe is not focusing on you and I. We are not the prime customers. The business to consumer segment is not large. Adobe is focusing on professionals, B2B, right? Professionals that need the best editing software. What is the best editing software? Adobe.
Kimball the Nimble says Adobe logins at its website are designed by someone who is trying to make you confused. Interface has sucked for years.
Yep.
All right, look,
True.
there are very legitimate problems with Adobe. I think that's reflected in the stock. It's at a massive drawdown.
55%. Everyone, all the problems are very much well known. Nobody's
Okay,
surprised.
And I would argue maybe the most important questions you should ask right now is, are these problems temporary? Can you fix these problems in 12 months? The interface, yes. The recurring subscription, you lie to your customers, yes. The AI integration, yes, they are doing it right now. Being, again, growing and attracting more customers, yes. They can do some partnerships with many schools to lure new customers, to attract the younger generation. Maybe I'm biased, but I think all these problems are temporary. I don't see the real impact on the moat. The real impact on the moat should be like if they did not integrate AI into their solutions, okay? But they are improving AI. They are improving their tools. They are improving their software. And customers are not leaving that much. So I think the problems are overblown here.
Look, I remember Apple in 2013 selling at a 12 multiple. And Carl Icahn came in, took a huge position. And they asked him, like, aren't you worried about competition from China and Android? And his comment was, okay, it's 12 times earnings, though. Like it's eight times earnings backing out the cash. I don't know if Adobe is 12 times. We'll get to that in a second. Put up the chart. Here's 1 year. Ugh. Disgusting.
Yeah, no,
disgusting. But everyone knows.
Yeah.
It's not like we're not revealing anything.
Right.
Everybody gets it. Everybody gets it. Here's a 10-year chart. Erased,
All of it.
I don't know, half a decade's worth of performance. Like this is very, very, very well understood.
So wait,
that
Josh, this is
company
very
might
much
be in trouble.
Yeah, this is very much not a compounder, right? If somebody's like,
No.
hey, dumbass, didn't you just hear what Adam
used to
said?
be.
That's not this.
No.
Maybe there will be a misunderstanding with what you just listened to. They have a definition for compounder from a guest they invited here on this first section of this video. So we have, for this video, the definition of a compounder is different. Okay?
No. And this didn't collapse 30% a month. It's not
and it was not up 100% in the past 5 years.
In this video, let me explain so you're not confused. In this video, you have a guest and they have a theory, they have an explanation, a great work. They define for their work, they define a compounder as a stock that has gone up 100% in, 3 years, 5 years. And in 1 month, it drops 30%. Boom. That's the fundamental basis for their analysis, okay? So this is what they define as a compounder, not as we talk about on this channel about compounders, compounding machine, growing revenue, growing earnings, right? For this video, the definition is different. Don't be confused.
At all.
Let me show you Adobe 3-year chart versus, I want to give you some perspective. Salesforce, which is in blue, this is 3 years, is up 60%, and that's an underperformer. The iShares Expanded Tech Software Sector ETF, IGV, is up 89% in the same period. This is just back to December 22 when ChatGPT came out. That's why I'm showing you this chart, guys. The start of the AI age. Adobe's now negative 6% for the start of the AI age. Now, are they going to lose seats? Probably. Are they going to have to cut some of their pricing on some of their products? Maybe. Because I don't think this AI stuff is going to be free. No offense.
By the way, there is a worry that is famous about how many seats will they lose. If you can do so much work with Adobe and AI, maybe instead of renting 3 licenses, you will only need 1 license to do all the work because AI is so great. And that makes me think of the Jensen paradox? Something we talked about for AI and Microsoft and Nvidia a couple of months ago during DeepSeek, the DeepSeek moment in January, so 11 months ago. And we said exactly this about LLMs and AI. What if Chinese guys can make as good of a product of AI, but with a minimal cost? And some CEOs came up publicly, including Satya Nadella from Microsoft, saying, well, this is the Jensen paradox. You know what? I'm not sure of what I say. Jensen paradox. Let me double check what I say publicly. Jensen paradox occurs when technological advancements make a resource more efficient to use. However, as the cost of the using of the resource drops, if demand is highly price elastic, this results in overall demand increasing. Okay, I'm not saying something wrong online. Yep. If the demand for something is high, as you become more efficient, it increases the demand. For Adobe, it translates like, yes, big companies will have fewer seats. If you are Universal Music and you use Photoshop for some reason, yes, you will need fewer licenses. But there will be young companies, small businesses that were hesitant to use Adobe, and they will just buy a new subscription. You will have small companies with smaller budget that will use Adobe's services because Adobe services, the software tools are becoming better. So yes, you will have seats that will be vanished. You will cancel some subscriptions, but you will have small guys that will start using Adobe for the first time because demand is huge. You need demand for photo and video. The future of this world needs more photo and video. Okay, small professional teams that will need more licenses. Maybe it's right. Maybe I'm completely wrong. We will see. Time will tell. Nobody knows. But maybe you will have this effect that we've seen for DeepSeek 11 months ago for AI and LLMs, ChatGPT, etc. Maybe we will have the same phenomenon happening for Adobe and AI editing software tools. Maybe. We will see. But it's important to see patterns in this world, right? I'm seeing a pattern here.
Are they going to be Are they going to be the company that figures out how to successfully commercialize AI tools and get professionals to pay for it? I'd say abso-fucking-lutely.
Yeah.
Here's I did an Adobe versus its P ratio too. I did it in 2 panes. Put it up.
Yeah.
You know what I'm saying?
Yeah.
Like, if you think you're the first genius to be like, oh, Adobe's threatened by AI, dude, everybody understands that. Not just the stock price, but the valuation. It's crazy. One other thing I want to say about this. Oh, Adobe's buying back stock.
Tons.
2.5 billion, a new agreement from Q3. They have 8.4 billion of the $25 billion prior authorization still left to do. So this is a company that could conceivably be buying like $11-12 billion worth of stock in the very near future into a multi-year low. And I want to show you the shrinking of the share count. Put this chart up. This is shares outstanding. You know, a lot of these software companies, the share count is growing because they're issuing stock options like crazy. And with Adobe, they are like, this is like the classic kind of stock that like a Berkshire would have bought back in the day. Look how they're shrinking the float. It looks like it's stacking.
Yeah, let me disagree publicly on this. No, Berkshire would never buy Adobe. I don't think so. Adobe is a software company, right? So you have stock options. They are rewarding employees like all the big software companies. So as you can see from this peak line, yes, the stock-based compensation expenses are up, rewarding more employees, diluting shareholders more and more and more and more. If you compare this peak line of SBC to the net income, that's substantial. So like Google or Salesforce, they are diluting shareholders by issuing more shares. And as the compound says, they are buying back their own shares. So this is a company that is doing buybacks. At the same time, they are diluting shareholders. So you have to be careful about what you see on the internet. I see some people online arguing Adobe is repurchasing a large percentage of their own shares. Let me show you what I mean. Okay, no, that was the revenue line. How can I show you? Maybe the buyback yield. Yeah, people are sharing this chart online. This is the buyback yield on Fiscal AI. By the way, guys, if you are not using Fiscal AI, I don't know what you're doing. You have a link in my description. The buyback yield right now is 8%. Some people say they are buying 8% of their shares. I completely disagree with this because you are diluting your shareholders with SBC. So yes, they are doing massive buybacks, but at the same time, it is being offset by SBC. So the real buyback yield is not 8%. What is the real buyback yield? Well, it's easy. I mean, you can check how many shares are repurchased in reality. You click on the percentage change here, you scroll down, and you click on diluted EPS percentage outstanding shares. So this is the amount of real buybacks. As you can see here, for the past 10 years, 2014, 15, 16, they did like less than 1% of buybacks, okay? 1, and then 1%, 2%, and now they are repurchasing 4.47% of their shares. On the last 12 months basis, here is what you have if you want more details, more granularity. So now they are repurchasing 5% of their shares. It's not 8%, okay? The CEO of Adobe went on CNBC very recently, a couple of weeks ago, saying, we will continue to do buybacks. We think our stock is cheap. So my guess is it can continue to be at 4 or 5% per year. So I just wanted to address this. It's not 8% buyback yield. It's more 4%. Okay. Let me continue.
Down, I'm eyeballing. What is that? 25%?
Yeah, it went from 500 million to 420. Well, guess what? They report earnings next week or in 2 weeks, so we're gonna hear from them soon.
Well, I have more on this. Is this like buying Alphabet last summer, or is that a bad comparison? Because people are saying a lot of the same things, that Google is existentially endangered by AI. Is that a bad comparison?
Well, it's not bad in the sense that they're under the same threat. The difference is Google addressed the threat and neutralized it and leapfrogged it. I don't know what Adobe could do or say that would lift those concerns. So I don't see Adobe like doubling and retaking its all-time high. I just think that there's so much pessimism in the name, and I think that it's too much. But listen, it could easily fall 15% after earnings. Like, I don't know.
Okay, because I made that mistake with Alphabet. I believed in that story more than I should have, that they had this existential threat from OpenAI and others.
But here's the thing.
So play out that way.
So last time they reported, it was 11% growth, a beat and raise, and the stock bounced for like a minute. Like, nobody believes it. So I don't know what they would have to say that would all of a sudden lift those concerns. But we'll find out.
No, only product, like only launching things that catch on.
Yes.
So, like launching, but the problem is they're not an AI company. They can use other people's tools and they can provide ports so that these new things that are invented can be used in the Adobe environment. But they, unlike Google, I don't think that they can invent their way out of this. I don't think they can partner their way out of this. So that
Actually, Google did not change a lot of things. The sentiment changed a lot. If you look at Google 6 months ago, it was hated. ChatGPT is going to take over them. Nobody would use the blue links anymore, which is true. Who uses Google anymore? We do our browsing experience through Gemini or ChatGPT. Last week, I just moved from ChatGPT to Gemini. So I'm biased, obviously. But after 3 years of using ChatGPT, I switched because I have tried Gemini and it's as good. It has become as good as ChatGPT. And the only thing that changed is sentiment. People sharing their stories on YouTube, on Twitter, saying how Gemini 3 Pro was great, Nano Banana was great. Yeah, sentiment is changing. The same thing can happen to Adobe. If people are really happy with AI implementation on Adobe, sharing what they have to say, sharing what they work on publicly, the sentiment can change very fast for Adobe. If people suddenly share their work and are really happy about Adobe and their AI implementation, the same thing can happen. Okay? If you want to compare apples to apples, Gemini improved massively in 2025. Maybe the products from Adobe need to improve massively in 2026. Maybe. So they have to massively invest in R&D, which they are doing so. The only thing that is changing is the sentiment, right? People hated Gemini before, and now they love Gemini because of small improvements. Now people hate Adobe and complain about Adobe, saying Adobe is dead and people will use other stuff. You need 6 months and then Adobe will be great. And it can double actually. If you look at 2022, we had the same drawdown. Look at this, for the past 5 years. The same drawdown, and in October 2022, the stock was $280. And in 1 year, it became 600. So because of sentiment, the stock doubled. So it's not crazy to think that the mood can reverse back, the mood can be positive again, and in 1 year it doubles. It's not crazy to say this because it has done it like less than 2 years ago. Okay? So if suddenly the sentiment changes, this is a stock that can double. Yeah, you have great arguments to be positive about Adobe right now. You have great bearish arguments because plenty of problems. But the sentiment is very fragile for this business. A lot of things can change in 1 year, you know.
That's why
they're partnered with everyone.
Already. Yeah. Wall Street is not giving up on this story.
No,
it's a $320 stock. Pull this graphic up. The high target on the street is 605. Can you imagine? The average target's 452. It's the $318 or whatever it is. 24 buys, 4 overweights, 11 holds, 2 sells. For a stock that's down this big, it's pretty remarkable. I want to give you some commentary here. Barclays just raised its target after the last earnings report from 460 to 465. Firm pointing to outperformance in net new annual recurring revenue, key progress in AI, noting that AI first ARR more than doubled over 2 quarters. I don't know. I got a whole bunch of price targets, some raised, some reduced. It's a battleground name. The one thing I want to say is that in Harvard, when you go to Harvard, one of the case studies they teach you in business school about disruption is from 2014, when Adobe went fully subscription. That's 11 years ago. Adobe was the first company to successfully take its entire business model of selling people software and change that to getting people to subscribe to their services. And when they did it, the stock became a compounder. It became one of the best performing stocks in the market. So this is a company that's got a heritage of completely remaking itself when the gun was to its head. Mm-hmm. And Adobe did that. So the question is, can they reinvent vertical AI, what they're calling, and have this user interface on top of the LLMs that customers will pay them for? And we don't know, but I do think technically, I like an entry here. I like 275 as a stop. That has been the line in the sand before. I think it's a relatively low risk entry, and we get to find out together.
Yeah, I mean, listen, we know that surprises usually happen in the prevailing trend, right? So maybe I'm an idiot, but I'm taking a shot. And if I lose money, won't be the first time.
It's a very good point Josh is sharing with us. It's not the first time the business is in danger. It's not the first time the business changes a lot. 10 years ago, you had to buy a license. Now you rent the license for a monthly fee. It's not the first time they completely pivot. If you check Adobe, you can check on Fiscalia, by the way. You click on segments and KPIs on an annual basis, and you see, where is it, like recurring, publishing and advertising, subscription revenue and product revenue, or service revenue, should be it. You know what, let me click on the 3 segments. Look at this. These were the big segments in the past. In 2012, the blue line was big. The red line was small. The subscription was small and the product was big. You sell your stuff, one-off sales. People would buy the license for Photoshop. And then they completely changed their business model to become a recurring business model. And here is the red line going up and up and up and up. And now everybody is enjoying a recurring sales from Adobe. This is a massive change when it comes to operations. So it's not the first time the management team is challenged. Maybe they will succeed again. And if you buy now, you can benefit a lot if you trust this management team. If you think the management team is competent and they will be challenged, but they will be nimble and survive and adapt and overcome their issues, maybe it's a great time to buy because now the stock is down and hated. Yeah, nobody has the real answer, so I don't want to have a strong opinion here. At the same time, you have Wall Street that is optimistic, which is bad. You want to buy when even Wall Street is pessimistic, right? But now Wall Street is optimistic. If you look at this, in blue, these are the price targets from Wall Street, and in orange, that's the stock price. The price targets are down and down and down, but still they are bullish and they think Adobe has an upside. I would be very curious to see the same charts, but for Apple in 2013 or Apple in 2016, when you had a lot of pessimism for Apple. Yeah, it could be a good exercise. I mean, if you want some homework after watching this video, you know what to do now. Check what analysts thought of Apple in 2013. And I want to conclude this video by showing you the DCF. Now the stock is down. What do you think the growth rate will be in the future? Well, we said the revenue was growing at 10% per year. If you look at the free cash flow now, it has grown at 12% per year for the past 5 years. What if free cash flow grows at the same rate as revenue, so 10% per year? What if they are doing 4% buybacks in the future? You want to be conservative? Okay, let's put 3%. You want to be even more conservative? Okay, let's put 2% buybacks every year. So you have a free cash flow that is growing 10% per year, buybacks of 2% per year, including the SBC, right? And you want a price to free cash flow at what? 25 if you want to be conservative, even 20 if you want to be conservative. If these are your estimates, the free cash flow will grow 10% per year for 5 years. They will repurchase 2% of their shares every year, and the stock deserves a price to free cash flow of 20. If these are your estimates, the fair value of the business of the stock is $500, which means the stock is deeply undervalued. And if you buy right now, you can expect a CAGR, a compound annual growth rate of 20% per year. Being a little bit conservative. You want to be extra conservative? Okay. If you think the business will grow at 7% per year, they have no buybacks whatsoever, and they deserve a price to free cash flow of 15, this is an ultra conservative mode. And if these are your assumptions that are ultra conservative, the stock is fairly valued and you can have a CAGR of 8% if you buy now. So the worst case scenario, if the growth goes down, 0 buybacks, and the multiple stays the same, you are still winning. You deliver 8% per year. I mean, the absolute bearish scenario would be deceleration and a decline in revenue. But for the moment, I don't see it happening because it's a recurring business model. And as I told you before, the revenue is still growing 10% per year. They are not going down. I can cross-read this with Evolution AB, a company I have been following for years now. Evolution AB doesn't have recurring business model. They don't have this. So there is no plateau. There is no support for the growth rate. For Evolution AB, this line has been going down and down and down and now being negative. But because Adobe is a recurring business model, they can survive and sustain a decent growth rate. Which means it's quite unlikely the revenue of Adobe goes down in the future. I'm not saying it's impossible. Anything can happen in life. You know it too well. But I'm saying it's quite unlikely. The tone of the management is great. They are implementing new AI tools. It's a subscription-based business model. I don't think revenue will decline. Now, what do I think will happen for Adobe? Well, I'm on the conservative camp because I'm still doing the research and I have not bought Adobe yet. I'm still doing the research to be completely transparent. And I'm just checking the mode, just reading some stuff, doing some heavy research on Adobe right now. Because a couple of months ago, they did not implement AI tools. But now it seems like they are accelerating with Firefly and etc. It seems like the management team is accelerating on everything that is AI related. I watched plenty of videos and I've been doing editing for 15 years now. So I know quite well the editing community and it seems they are delivering faster than ever, which is very good. Very similar to Google when everything accelerated with Gemini. So maybe the free cash flow will grow at 12% per year. I think it will happen. Maybe they will do buybacks of 3% per year. And maybe the price to free cash flow will stay at 15. If this is the case, that could be some reasonable estimates actually. If these are your estimates, pretty good chance of happening. The fair value is 30% higher So Adobe is cheap. And if you buy right now, you can expect a CAGR of 16% per year. What if the mood changes? What if the sentiment changes and you have a price to free cash flow of 20? After all, if you look at the price to free cash flow of the business, it has fluctuated widely. And let me check the price to free cash flow for you so you don't have to do the work. This is your price to free cash flow over time. The average for the past 10 years has been 32. And 2 years ago, the price to free cash flow was 30. What if the mood changes and you go back to 30? It can happen, guys. It can happen. Everything is emotional in this stock market. Now, when stocks go down like this, everything is about emotions. You have to be rational and make an informed decision. People are not rational here in this market panic. Not at all. So if you think the price to free cash flow is 20, then the stock is an easy double. Easy double, you can generate 20% per year, 23% per year easily. And if you go and ask for a price to free cash flow of 30, you are salivating. I mean, if you are extremely bullish, this is what will happen. If you are extremely bullish, this is your absolute ultimate bullish scenario with a 12% growth rate. If you think they deserve a price to free cash flow of 30, then you can have a CAGR of 30% per year. But let's not salivate too much, right? If you think 20, then you can generate 23% per year. Right now, I mean, tomorrow you can buy. So I will continue to do the research. And the more I research it, the more I want to buy it. Okay? Because everything is accelerating. Because you have this Jensen paradox. Because it reminds me of Google. And actually, I share Arya's view. He recently trimmed his Google position to buy more Adobe. And I completely understand this move. It's a great move. I agree with this move because the risk reward is improving with Adobe. Google is going up massively, Adobe is going down massively, and they will report earnings soon. So we will see if this is getting interesting or not. But out of all the compounders that are left for dead, like all the Copart or the ODFL, or Adobe seems like a very intriguing opportunity right now. So I will keep you updated, but I'm still doing the research now. I'm not buying it right now, not because of I want it to be cheaper, right? It's a matter of conviction. It's not a matter of price. I don't have a specific target price here. It's a matter of conviction. But when I see the signs that everything is fine and everything is accelerating and editors are finally happy with Adobe and sticking with Adobe, when I have the proof of this and the conviction of this, I will buy. But until then, I'm just waiting. Okay, that's it for this video, guys. I wish you a nice rest of your day. See you. Bye-bye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.